morning, everybody. Today I'm going to talk about Ashok Leyland, who came out with very good numbers of Q4 a couple of days back, and it was really very it was satisfying to see such kind of numbers after a long time. We know that the first 3 quarters of the company were deep into red, but this quarter was stupendously above everybody's expectations. At least on the margins front, the margins, EBITDA margins came in at about 8.9%, where the street was expecting close to about 7.5 to 8%. So the volumes have also grown significantly up, more than about 30 to 40% for the quarter on YY basis. On a QOQ basis also, the growth has been close to about 10 to 12%. So if you see the MHCV volumes have grown much higher than the LCV volumes, and definitely that is because of the capex program intensification by the government, higher emphasis on construction, real estate, mining. Agriculture is also panning out well. The kharif crop was good, even the rabi has been good, and therefore the MHCV demand, all the underlying parameters for that are very much in place, and the sector has grown close to about 20 to 22% this year. That was FY22, I mean. So that was a very good year for commercial vehicles after long time. So this upcycle that we are seeing is definitely helping the number 2 player, that is Ashok Leyland, in the country. So the numbers have been really very good. There has been a good margin beat as well as the bottom line beat, and going forward, all these parameters will be in place. The company is coming up with new models both in the MHCVs as well as the LCV industry. As far as LCVs are concerned, I would say that they were in a slow lane because of the high base of the previous year, and the more emphasis was on MHCV. So going forward, with new launches coming up and the last mile transportation gaining very much importance because of the e-commerce revival and the e-commerce profit proliferation, I would say that is one of the main reasons why the LCVs are expected to do well. On the bus front, I would say that opening of markets, opening of schools, offices, etc., colleges and all are definitely going to help the growth in the bus segment as well. So overall, if you see going forward, the margin escalation is expected because of the price hikes the company is taking, and they are getting very well absorbed. Also, the discounting is low, and the product mix is tilting towards MHCVs, as well as exports are doing good. Aftermarkets are performing well. Aftermarkets have been one of the mainstays in the COVID times. Replacement demand is very much in place. Although also the freight rates though have got impacted currently, but going forward we are expecting a good movement in the freight rate as well. Even the fleet operators, the profitability and the utilization rate of the fleet operators are expected to move up with the higher demand. So overall, Ashok Leyland is one of our top picks within the commercial vehicles. So we are giving a buy rating. We have come out with a report with a buy rating on the stock with a target price of 173 rupees. So that is one of the best stocks, I think, within the commercial vehicles, because it's a proxy to the growth in the domestic CV cycle. So I think that one stock definitely everybody has to have in their portfolio. Thanks a lot. Bye.